What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this update is a brief analysis on the price action that we saw today. We're going to look at the day-end Ortex numbers and then two really important things that we have seen develop towards the end of the day today and just in the after-hours trading period. We have Janet Yellen basically coming out and saying that there is a very high possibility of essentially short squeezes or major sell-offs in the market due to the over leveraging and the vast amount of leverage that is out in the market right now. And guess who she says has done this? Hedge funds. Now, the second thing that we need to talk about is Citadel is actually firing back right now on Twitter. We're going to go through a couple of these statements and break down exactly what they're saying. But the fact that they are just going to Twitter and trying to win over the public in terms of their tweets right now to try to make it look like they are completely scot-free, didn't do anything wrong in this January situation is honestly comical for a couple of reasons that we're going to go over a little bit later. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button. I have heard of some people getting randomly unsubscribed, so make sure you guys check to make sure you're still subscribed to the channel. So today was not really what we wanted to see out of AMC. Again, we see the volume over here incredibly low at 39.25 million, and we saw a decent size red day. We closed at $36.99, and in the after hours trading period, we are trading at $36.78. But remember, we have a lot of other alternative things going on in the market right now that are affecting everything. Not everything is going to be driven by AMC, GameStop, and these stocks that we like to talk about all the time. There are always going to be global economic events that are at play that are either going to move the markets in the bullish or bearish direction, and that's kind of what we're seeing. We are seeing the volatility that I was expecting to see. If you guys remember in one of the videos last weekend, I basically said with all of the debt ceiling stuff, Evergrande stuff circulating around, we're going to see the market pick a direction. Maybe it's going to be to the upside. A news article is going to come out and it's going to send it right back down. Until we get a lot of these situations resolved with what's going on in the government right now, we're going to continue to see a lot of this volatility. So when we come over and look at Ortex, we're seeing the utilization, again, hasn't changed, 87.17%, and the short interest, 20.75%. That is very, very high. Now, I've heard a couple of theories as to why the utilization is staying so low, but what it really comes down to is that somehow, some way, these institutions, these lending institutions are figuring out a way to get their hands on more shares to lend. Now, when we come over to this Janet Yellen situation over here, there is this video from a speech. You can kind of see her down here, Janet Yellen speaking today on, I believe this is Bloomberg. So basically what she says, there are concerns about hedge funds and the danger of leverage, which might result in financial runs. Now, what exactly is a financial run? Well, when we come over here, understanding runs, a run is a series of consecutive price increases or decreases in a given security. Oftentimes, traders refer to a run as a bullish rally or a bearish rally. There is no set period of days that classifies a run, but conventionally, most traders consider 3 or more consecutive price increases a run. Now, why is Janet Yellen talking about what is going on with financial leverage? Now, when we come over to this chart that we've talked about a couple of times, this is the margin debt chart compared to how the S&P 500 moves over the last 10 to 12 years. Now, this red line here, it is inverted. So when the line goes down, it means margin debt is going up. And we saw in July, the margin debt significantly decreased by about 4%. And then in August, it increased by over 8%. So what we're seeing was a little bit of a start of a deleveraging wave, and then we saw these institutions basically lever back up. We don't know if this is long or short volume, but we saw them lever back up, and that is cause for concern, according to Yellen. Now, this is not the first time that she has come out and said these things. When we come over here, Yellen revises regulatory group to scrutinize hedge fund risks. Now, coming down a little bit further, we can see that the pandemic showed that leverage of some hedge funds can amplify stresses. So she is really in tune with what is going on with the leverage levels and what these different different institutions are doing. If you guys remember back when the Archegos situation was playing out, they were using those total return swaps to get an enormous amount of leverage, and they came crumbling down, and they are actually mentioned in this article right here as well. Now, let's get into a couple of these Citadel tweets. They're pretty interesting, so I want to make sure that a lot of people are really in tune with what's going on. So this is the first one. Conspiracy theorists and plaintiffs' lawyers are trying to concoct an absurd story from regular way communications among Citadel Securities and the brokers who handle orders for retail investors. Of course, the teams at Citadel Securities and our counterparties are in constant communication to meet the needs of the retail investor community against the backdrop of a global pandemic. Amid an unprecedented surge in retail trading engagement, our respective teams made sure that operational demands were addressed and that retail investors had access to Citadel Securities' superior execution capabilities. Okay, so this one isn't that bad, but then we have this one right here. There are those who still refuse to believe an American landed on the moon. Internet conspiracies and Twitter mobs try to ignore the facts, but the fact is that Citadel Securities was the preeminent market maker to the retail brokerage community in January 2021. It's like they're bragging when they're talking about this. Citadel, we know that you're the top market maker right now, and then Virtue's right behind you. That's kind of the problem, that there's only two of you that are getting all of this order flow. On January 27th, numerous retail brokerage firms imposed restrictions on the trading of certain meme stocks due to capital constraints, liquidity concerns, and other commercial reasons. 100% fair, that definitely happened. Citadel Securities never requested, intimated, agreed, or otherwise sought to limit or restrict the trading of such securities. Sorry, I started there for a little bit. On January 27th, we executed an astonishing 7.4 billion shares on behalf of retail investors. Again, they're just kind of bragging that they are the top market maker right now. We're proud of the important role we have long played in making the U.S. financial markets fair, transparent, resilient, and the envy of the world. Now, basically what they're trying to say here is that nothing is wrong, we didn't do anything. But the problem is that if they were actually trying to put out a real statement about this, they wouldn't just go to Twitter and try to win over the people that they say are the conspiracy theorists. They would put out a public statement. They would go to the news media, news media organizations, and come out and talk about this. But they're just making a couple of tweets right now. It's not really a big thing that they're doing. And the second thing is, we know that the NSCC was really the problem when it came to turning off the buy button and marking those securities position close only. And when we come over here, we know this individual, David Ings, is a global head of operations at Citadel and Citadel Securities, and he's also on the board of the DTCC. Now, just him alone is not going to be able to move mountains in terms of what the DTCC or the NSCC is going to be able to do. But just having this individual on the board, I mean, it does make sense that the top market maker would have one of their individuals on the board of the Depository Trust and Clearing Corporation. But what we're really looking at here is Citadel's trying to fight a battle that they don't really know who they're fighting against. Like, if there's all of these lawsuits, just prove it in court and move on with your day. But that's not really what we're seeing here. They're trying to come out and cause a Twitter storm, which I highly doubt that they're going to be able to win. But again, something to keep in mind going through this entire situation is that we are probably never ever going to know who the institutions are that have over-leveraged themselves on these short positions and tried to push AMC and GameStop and a lot of these other stocks in the past out of business. And that's just the way our reporting standards are set up. But what we do know is that it's entirely possible when we see the volume massively spike and we see these price run-ups in these given securities, that market makers like Citadel, when they get a lot of this order flow, in order to provide that liquidity to the markets, they have a legal ability to naked short as a part of their hedging function and to provide that liquidity to the market. And they can take the other side of the trade, which would also just be direct shorting, in order to provide liquidity to the market. So that is one of the ways that you could kind of see and prove that Citadel probably at one time, we don't know if they do right now, had a sizable short position on GameStop and AMC, but just the way our reporting standards are set up, we are never ever really going to know. What we really need to be focusing on is what we can control. We know the information that we have provided ourselves, done the research over the last 8 months, and at this point, we pretty much know the deal. We know that there's going to be a lot of manipulation, and we also know that there's a lot of global economic events occurring right now that are unrelated to the actual true price movements of these stocks. It is really a waiting game at this point, but again, nothing I say in these videos is financial advice. These are for educational and entertainment purposes only. My job is to provide you guys with the information that I am seeing the way I see it. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a good day, and I'll see you guys in the next video.